Hello, nearly Christmas. Start in the United States of America, housing units started. Housing, building. And this goes back to 1961 and 5+ unit housing and 1 unit housing. You can see that there used to be a lot of it, but there ain't so much anymore. And that's kind of what we've got with the whole American economy, I think. This borrowing and whatever. It's a whole momentum, an idea that we build a lot of housing, but now we don't. But that momentum is carried on in the mind of people and in the borrowing of people, but the reality just isn't there anymore. Right, this is going to be 3 charts about the Fed. Now, say what you like about the Fed. I'm more and more appreciating what brilliant work they have done over the last 3 or 4 years. Now, you can hate them, but they're there, asked to do a job, and they're doing a job. Okay, this is the emergency lending facilities that they put in place, and you can see the dates, end of 2008 and into 2009. And by the end of it, or at the maximum of it, or during it, you could even say the stock market had crashed to that 666 S&P low, and then it started building out again, and a lot of it was on the confidence that the Fed was there to do this sort of work. And the numbers are big, and the acronyms are confusing, but whatever it was, it worked. This is stretching the time out from 07 to 11. And in orange there is the emergency lending that was in the first one, that spiked up end of 2008, early 2009, and has been dribbled away. It doesn't happen anymore. Other things are happening. Mortgage-backed securities have been bought, and more treasuries and agencies have been bought. And that is what the Fed thinks is best that it can do to support the banks and the economy. This one is the really last one, just right up to date, and I've put it in just to show that orange little kick up at the end is these swaps, and that's quite liable to turn up quite a bit more. And as I said a few days ago, if it doesn't turn up a little bit more, or quite a lot more, I think the Fed will invent some other thing to expand its balance sheet on. Right, let's go to the S&P. Is it this one? It's not just Europe, it's China. What we've got, oh no, we're on treasuries this time. I had these M&G up yesterday, but I didn't use the European chart. Okay, the greeny sludgy colour are the treasuries for the United States, and you can see there on the deck, and they're the yields on the treasuries. So the lower they go, the more nervousness there is about the place. Yeah, lower they go because people go into treasuries willing to pay a higher price for the treasuries, which pulls down the interest that you'll get. And these are the 10 years, and in dark bluey green is the Shanghai Stock Exchange Composite Index. And you'd think, well, why is the connection there? There is great fear in the world that China might have got it dreadfully wrong, and if and when China does collapse, it will make a horrible mess in the world. We know, this chart I didn't put up from yesterday, Europe is making a mess of the world. China has an even greater potential for making a mess as well. And all the way back to 2009, this is being factored in by the bond boys and girls. And an old thing that I said a long time ago, if you want to work out how things are, or keeping an eye on things, the equity boys and girls will get things wrong first. The boys and girls from the bond division will get it wrong second, and the Forex trader boys and girls will get it wrong last. Right? So these are the bond boys and girls, and they fear China tripping up. Australia risks China hard landing, that's what they call a real mangling, when things start going wrong and then other things knock into other things and then blap, really falls over. It's not a controlled going down, it's a real bam. If China's economy really is slowing, the first tangible signs of trouble will be visible in Australia. And it's just quite true. Australia is so very, very plugged into China. And the boom in China has led to a horrendous boom in Australia. Australians probably think it's because they're so wonderful, but it really isn't. It's just a historical accident. And if the historical accident called China gets it horribly, historically, accidentally wrong, the marvellous Australians will trip over their own feet as well. Big style. China asks Iran to lower crude prices. They're twisting Iran's arm. They're saying, look, we're going to drop our demand for your product, your oil, by so much, 10% I think at the moment. How do you think about that? Wouldn't you prefer you just drop the price down a bit and then we'll buy 100%? They're messing about with Iran. China is trying to strong-arm them. This next article, Tehran, Iran's currency, the rial, plunged to a record low against the dollar Wednesday, trading at 15,800 to the greenback on the street market, to the concern of officials. The depreciation marked an acceleration of a long fall in the value of the rial as Western sanctions bit into Iran's economy. The United States and Europe are expected to impose further measures in coming weeks. They're really giving Iran a kicking. And I'll just say it again, I say it every time, I don't know why. There are countries that do a lot worse than what Iran does. They just seem to be the world's whipping boy. The slide undercut avowed Iranian policy to keep the rial steady against the dollar, and you can guarantee that the whoever the American CIA or FBI or whoever they are, they'll be there trying to undermine the Iranian currency. And I think it's beside it being unfair, it's a very dangerous thing to be doing, because it's a very volatile region anyway. Bank of Japan downgrades view of Japan's own economy. The Bank of Japan has downgraded its assessment of the Japanese economy as sliding exports and expensive energy imports caused the largest November trade deficit on record. It's another accident waiting to happen, Japan. Japan is a bomb waiting to go off. It will go off one day, but they're just remarkably good at not kicking it down the road, but picking it up and carrying it ever so carefully down the road. Bloomberg, Europe, bonds stop flowing as collateral gets stuck at the ECB. We'll all probably know that the ECB is taking all sorts of loans in to its own body, printing up money and giving the cash out to the banks. I think it was nearly $500 billion that went out yesterday in 3 different auctions. And the problem is that the financial system has got a way of doing things historically. It's just through time got a way of doing things, and it's swapping collateral around and putting collateral here and getting cash in between for themselves, between themselves. And that's all been disrupted. And another thing that's been disrupted is rehypothecation, which is a subject that's been bashed around the internet for the last 2 weeks, and a lot of rubbish has been written about it. But this is fair enough. Second paragraph. Rehypothecation is the final financial alchemy that transmutes 2.45 trillion of assets into 5.8 trillion of collateral at the 14 largest security dealers. down from a peak of 10 trillion in 2007. And this is true. And what's happened is the ECB has accepted to take really dodgy, any old crap loans, assets, bits of paper for the cash, which has left the best collateral to be traded as it always was between the institutions out there in the real world. But even so, there's a lot of paper that's gone to the ECB, which has brought down the amount of paper that can be traded in between the banks and other financial institutions. And rehypothecation is where you put your asset to one institution, you get something in return, probably cash. That other institution is holding your bit of paper. They will then give it to somebody else, promised it somebody else for something else, and that asset is swapped around the place, only in London where this is allowed to be done, and it can multiply itself, double itself according to this, and in the old days it used to double itself even more, and that just can't happen anymore. And there is a general lack of collateral in the European Union, and this is what the credit crunch is. Because in the old days you didn't even have to post collateral for all of these loans. Lots of loans were just uncollateralized. They just phone up and say, give us some money, okay. But now things are dodgy, everybody has to post collateral and more of it. And with a lot of it going to the ECB and getting stuck there for the Eltro period of 3 years, which was one of the functions yesterday, that's a lot of collateral that's gone out of business in Euroland. Had to throw this in. Press Europe gives us Barroso named in submarine deal inquiry. I think you will note that I'm not Barroso's #1 fan. Jose Manuel Barroso, the President of the European Commission, has been mentioned in a German police investigation concerning the sale of 2 German submarines to Portugal in 2002. Excellent. Take him away. Right, this is a good chart. Where I finished yesterday was consumer confidence in the UK, and this is a good chart showing it. It's same people, GFK, and it goes back to 2004. And 2004, 2007, you can see it was just below 0. But the Brits are never really going to be saying, yeah, life's great, like Australians might, or similar things Americans say. The more optimistic type of people, they're always a bit, it's all right, isn't it? So they were never really up there with the confidence. It was always slightly negative, but you can see how it plunged down in the Great Recession and tried to get back up again, and really is plummeting again almost to the depths of the Great Recession, with that orange line being the moving average. And you can see it's on its way down again, and the recession hasn't even been announced yet, although I think it's there. This is from Gary Schilling, and just 9 little things about the future. I'm not going to post too many of these, but they're all over the internet. Clever people telling us what the future is going to be. US consumers will shift from a 25-year borrowing and spending binge to a savings spree. I've highlighted the ones that I pick out, not that I agree with, but are better discussion points. So will Americans go from borrowing to saving? Financial deleveraging will reverse the trend that financed much of global growth in recent years. Increased government regulation and involvement in major economies will stifle innovation and reduce efficiency. Low commodity prices will limit spending by commodity-producing lands. That's Australia again, and others, Brazil, etc. Low commodity prices, it's an interesting one, that. And it could come on when we get the next ones. Developed countries are moving towards fiscal restraint, which will lead to recession. Rising protectionism will slow, even eliminate global growth, which should bring down commodity prices. The housing market will be weak due to excess inventories and loss of investment appeal. That'll bring down confidence of the Western world and lead to recession, bring down commodity prices. Deflation will curtail spending as buyers anticipate lower prices, which will feed back on itself, lead to recession, and lower commodity prices. State and local governments will contract. Who gives a damn? Compared to the rest of it anyway. How much time have I got? Oh, I've got a little time. I just wanted to go to financial deleveraging will reverse the trend that financed much of the global growth. Banks. I just wanted to get into your head, I'd just like to say, banks aren't what they used to be 30 years ago. Now we know this, but I've got a simple way of saying it, which might be helpful. How about that? In the old days, they used to intermediate between people that borrowed and people that saved, for private borrowing, for mortgages, or company borrowing, for investment in a factory or whatever. But they don't anymore. What they really have, they are companies that make money. They do still take deposits, they borrow from other people, but they're lending to private and business is not really, it's only part of their business model if it's going to make money. They're like corporations. Their responsibility is to their shareholders and to getting their own bonuses. It's not to do lending or anything like that. If lending to the working real sectors are not profitable, they just won't do it. And that is what's happening. It's just that they've got no obligation to it. We think banks are like they were 30 years ago. They're not. They're just corporations that take in money and invest money to make more money. And that's all. If the real world isn't a good investment, bankable opportunity, they will not do it. And at the moment, they're taking, like in Europe, this Eltro 3-year money. They've got the choice to do the Corzine trade, which I tweeted yesterday, retweeted. The Corzine, must be tearing his hair out. With this Eltro trade, the Corzine-Sarkozy trade, the chances are MF Global wouldn't have blown if it could have just held on till now, because there'll be enough banks doing the Corzine-Sarko trade that would make it so that MF Global wouldn't have blown. Anyway, but the banks, they'll do the Sarko Corzine trade if it makes them money, but a lot of them won't be able to, because they've got to have their banks in order for the new regulations of next year. So they're taking money at 1%, they're putting collateral into the ECB, getting money, paying 1% for it, but can't find or will not lend it to the public because they don't think they're a credit-worthy opportunity. So they're putting it straight back into the ECB and getting 0.25 for it. Crazy, absolutely crazy. But you and I, the rest of the world, we're not credit-worthy. We are not bankable opportunities, and they cannot see bankable opportunities to make money for themselves and their shareholders. So they won't do it. All they're doing now, it's classic, what do they call it, zombie banks. All they're doing is getting their books in order to pass inspection of regulators when they're setting these new regulations. Lending or doing functional work that they used to do is just out of the window. It's not on the boardroom table at all. Not unless somebody can get on that boardroom table and say, this is a good way of making money. But at the moment, it's not. So it just doesn't even get discussed. Bye.